Let me clear my throat. Stop hunting, liquidity trading. Let me ask you a theoretical question here. So, if I told you right now, there's 100,000 traders who were long Bitcoin, who were being stopped out of their positions because price has gone against them, and they're being forced to sell $1 billion worth of Bitcoin on the market. They don't want to, they have to, because that's where their stop loss was, that's where their liquidations are, and it's happening, it happened. Would you be interested in being on the other side of their trade and buying from them? Do you think it would be a good deal? Not knowing the price, not looking at a chart, just knowing that that's happening. There's a liquidation cascade to the downside. I would say yes, I think that's a good deal. Now, say we buy here and we wait a couple weeks. 1 to 2 weeks go by. And now I tell you, you bought 2 weeks ago, not knowing the price. I'm not telling you if you're at a profit or a loss. I'm not telling you what the chart is, but I'm telling you that right now, a lot of 100,000 traders who were short Bitcoin are now being stopped out of their positions. They're being forced to buy $1 billion of Bitcoin at the market. Would you be interested in taking the opposite side of their trade and closing out your long position that you bought 2 weeks ago? I would, and I would expect that I probably did well. Now, I might not win every individual trade, but I probably, over time, if this is my strategy, I'm going to do well. And I could do nothing else in between, and I would probably do well. I'd probably make enough money to live off of, to have a good living, just by trading these forced transactions, where by only trading against forced market participants. And all my data, my theory, my experience has, for the most part, confirmed this to be true. And every time that I deviate from this and I try to enter at the market or predict where a price is going, it usually doesn't work great for me. But when I just simply take the other side of liquidations or enter immediately after the major liquidations, usually it goes pretty well for me. So, and again, I don't even believe you need to be a chart trader to do this. However, chart's probably necessary in order to just spot on the map where these liquidations are occurring. However, that's not that hard to do. Where are the liquidations? Well, first you have a tool like HY Block, liquidation heat map, and there's a couple of these that show estimated liquidations, stop losses, where they're going to be hit. Now, you also have on just a regular chart, if you go to a daily chart and you look for gaps, areas where price is not revisited in several weeks, 2 months, but several weeks is pretty good, at least a couple weeks, where price is traded, maybe poked into that area a couple times, but has left it alone. Every time that happens, people are entering and putting their stop and surviving. And when price comes back, the ones who didn't close their positions will be forced out. So, looking on the chart on the map for areas like that, where there's a lot of daily highs or a lot of daily lows that end in the same place and an open space beyond it, that's where the liquidations are likely to drive price to. Now, how often do these trades come around for Bitcoin and Ethereum? Generally, a couple times a month, maybe once a week. And there's varying degrees of this, right? People are getting stopped out on most days. I mean, some days price trades inside and not a lot of people get stopped out. There's not very many liquidations. There are some days where a couple days worth of traders get stopped out. I'm interested in when there's weeks worth of traders, a week or more worth of traders getting stopped out at the same time. If your requirement is price can't go in this area for a week, then by definition you expect to wait. Well, you have the two areas, the high and the low. So say you want a month worth of liquidity, you can have two trades because you can take the high and you can take the low. So if you want 2 weeks worth of liquidity, then you can have a trade once a week. 1 week you take the low, 1 week you take the high. There's not that many trades doing this, but I would reckon and I believe that trading once a week is sufficient, or twice a week is sufficient to pay the bills, and that it's not just about the money you make, but it's also about avoiding the losers in between. The losers in between being, it's okay, the losers in between being all these trades that are just in the middle and not paying attention to the big picture. So that's how I made a killing last year. Stop loss hunting, participating in the stop hunts, setting limit orders where the stop market orders are going to be, and sometimes I lost. A lot of the time I won, and when I won, my wins were usually huge. And I sort of got away from that this year, and this year got into I became the liquidity. I became my stop loss getting hunted, but just looking in there and trying to, from what price did yesterday, predict where price is going to go today, or based on what price did in the last hour, predict where price is going to go based on just chart patterns, not paying attention to where people's stops are, not paying attention to these higher time frame ideas, and it didn't work well. So I'm returning to the stop hunting. I've returned to the stop hunting, and I feel good about it. Now, what's interesting about this stop loss hunting is, I tell you, people are being stopped out right now. Do you want to take the other side of their trade? It's not making a prediction about the direction of the market. We can make a prediction about the direction of the market and say that when a lot of stops are taken out, the conditions that cause price to move so fast in one direction are likely to reverse, and we can expect a reversal of some kind, enough to get your stop to break even, maybe enough to have a big winning trade. But we don't need to make a prediction necessarily for that to be a good trade, right? Again, I'm telling you, people are being forced to sell. Would you like to take the other side of that? I believe that not making a prediction, not looking at chart, not looking at price, just transacting with forced participants, my limit order versus your stop market order, that is a winning trade. Generally, it's a winning system. It has edge. Not making a prediction about the market. The edge is in the transaction itself. It's a transactional edge to participate with forced sellers. So I'm gonna buy from forced buyers. I'm gonna buy from forced sellers, and I'm gonna unload on forced buyers, and then I'm gonna open new positions, sell on forced buyers, and then unload my shorts buying from forced sellers, right? So that is my strategy, and I believe that is an evergreen strategy, that will never go away. The edge of the transactional edge of being on the other side of forced traders will never go away. Now, the exact setup will change. The way that price interacts with these stop losses, the way that price interacts with these zones Maybe it will move in 2 wicks, maybe it will move in 3 wicks. Maybe it will reverse in 24 hours, maybe it will reverse in 4 hours. Maybe it will, right? The exact pattern will change, may change, which is why focusing on the chart pattern, I believe, is a mistake, and focusing on the concept is correct. That there's always going to be an edge, and being on the other side of a lot of people who are forced to transact. Because when everybody's forced to sell, it's like a flash sale, right? It's a discount. It's a premium, right? Sorry. It's a deep discount, and price isn't going to stay in that because people will buy back into their positions, or at the least, like, how did price move down? It moved down by forced selling. Once the forced selling is over, that condition is gone, right? Or if everybody's forced to buy, price is at a premium. Forced buying, once the forced buying can continue for a long time. Forced selling can continue for a long time. But once the forced buying is over, why should we expect price to move up in the same way? It can move, it can continue to move up, and it can continue to move down. I'm suggesting trading with a stop loss, and there's a chance of being liquidated, but that is protection that we need for the times that we're wrong. Or that, not that we're wrong, it's just it doesn't work this time because there was so much forced selling, or after the forced selling, like, a lot of greedy buyers came in and continued to drive the price up, and I'm on a stop loss to protect for that situation. That, hey, a lot of people were stopped out, but a lot of scared sellers came in afterwards and continued to sell and drove the price down. So we're going to use a stop loss, and we're going to lose some trades, but we're going to win some trades. And a Bitcoin might have, with this system, say 4 to 8 trades in a month, and ETH might have 4 to 8 trades in a month. And if you do the math, that's 8 to 15 trades in a month. And take all those trades, trade nothing else. Do not try to, well, an exception here would be to, at times it may be possible to anticipate that price is going to move to one of these zones and to jump in before. So here's another setup, which is buying immediately before a lot of forced buyers and selling immediately before a lot of forced sellers. I don't think the setup is nearly as good, but I think that can be a valid setup too. And there may be opportunities to enter on liquidations on a counter move before the big liquidation. That's probably preferable. Always entering on some kind of retracement, because it is necessary to have a retracement to have the condition for buying and selling at a premium or a discount. Only a limit order. Yikes. So that's the game plan, and that's what we're gonna do. So I wanted to go surfing. It doesn't look nearly as good as it did this morning, but it might still be worth paddling out. This is where I live. I'm grateful for it. I want to hang on to this as long as possible, possibly for the rest of my life. So let's get it. Much love and peace.